All right, everybody, welcome back to Real Talk Realty Podcast, where we put the real in real estate. You are with your host, JD.
And Gabby.
And Louis Namick.
And we have a very special guest this week. We got Darren Rickwood, the Darren Rickwood, one of our preferred lenders that we work with and we do a ton of business with. And what a great guy to have on here. And we're going to be talking about some really cool stuff today.
Appreciate it. Glad to be here.
So, Darren, tell us a little bit about your journey in the lending world. When did you start? How long you been in the business?
Oof, it's been a while. So we're going on 18 years. I've been with the same company for 17
Wow.
with First Home Mortgage here in Maryland. Started out, I did boat loans. I did recreational lending, airplanes, boats, campers.
Oh, wow. I didn't know that.
Once I got out of that, the market started crashing for those items. Got out of that, got a job. I did a boat loan for a gentleman who was a lender. He actually wanted me to come work for him, so I did.
Nice.
Learned the business, got into it probably in September or October timeframe. Took a test. They just started coming out with the national test we had to take. Took that over to holidays between Christmas and New Year's. The markets crashed February the next year. So it's welcome to the business. Have fun.
Right.
But no, it's been great ever since. Love it. Wouldn't do anything else. It's different every single day. You're meeting different people every day, coming out here and sitting down with you guys.
I just
it's awesome.
love when you call me.
I'll make sure I do it more.
Yeah.
Yeah.
I like it when you call me.
Oh,
That's awesome. And you have quite the outreach too, because you're not even, you're actually down in what, is it the Eastern Shore? That's
No, so I'm in Southern
You're a little
Maryland.
bit of
I'm
everywhere.
a little bit of everywhere.
Yeah.
A little bit of everywhere. So go out to Hagerstown. Actually, I've done some stuff out in Western Maryland, Deep Creek, that area. Focus mainly Southern Maryland, but in the Prince George's County, Charles County, Montgomery County, those areas. So kind of everywhere.
Yeah. And you're licensed in which states are you doing?
So Maryland, West Virginia, Pennsylvania, Delaware.
Okay.
So
Delaware.
pretty much kind of cover everywhere.
really?
Yeah.
And for all those snowbirds don't want to go to Florida, now they want to buy in Delaware.
Yeah.
Yeah, you know.
Save on taxes.
That's right.
That's true. Yeah.
That's right.
Delaware is like one of those spots. It's like, isn't that they have like huge, they don't tax retirement. Is
They
that
don't
what it
tax
is?
your retirement.
That's what it is.
So
Yeah.
a lot of people that don't want to deal with Florida or the sun
Yeah.
end up going to Delaware.
That's smart.
Yeah, well, that's the way it should be, really.
Yeah. Why are we taxing the retirement?
Why are we taxing people who own their houses outright and who are older?
Well, we just heard something funny last week during our meeting that they're it's the Maryland governor is going to start taxing services. Is that what it was? It was like,
Services.
so basically if you have an accountant who does, or a CPA who does your taxes, you're now going to be paid taxes on them doing your taxes. What are we doing, y'all?
So it's like your appraisers, home inspectors.
Oh, too.
Everything
So
else,
that's
I
that
would
too.
assume.
All of that.
If you're providing a
Yeah.
service for somebody, yeah. The cost of doing loans is not, it's not that it's expensive now. It's going to go up even more
Right.
because you're going to have to build in all those costs.
Yep.
Some of that they pay outside.
Yep. So we were talking a little bit before we started rolling here about kind of the market, what's going on, what we're seeing out there with some of these listings. And there's quite a few listings out there. Even the ones that we have ourselves, it's like, if it's not an absolute immaculate condition, it's really got to be priced correctly or it's going to sit there. So whereas, a couple of years ago, we didn't really have to tell sellers to do X, Y, and Z to get their home ready for the market. We just say, hey, let's throw this bad boy up there. Now it's more about the presentation of it. It's about making sure it's priced good. But in the instances that we're seeing some of these properties where, it just needs some cosmetic work and some things like that.
They're definitely not move-in ready.
Yeah.
They're not move-in ready homes, and they're going to sit.
Right, and they're going to sit. So you have to be a little creative too, and kind of talking to our buyers about some of the programs that might be out there. And Darren has a lot of experience with some of these rehabilitation loans where essentially you're going in, you're making an offer. I believe you're taking a contractor with you to get an idea of what the renovation is going to cost. And then we're seeing about, the program about lending them a portion of the money to do those fixes. So tell us a little bit about what that looks like and like the ideal candidate.
Think about your clients, and there might be some other real estate agents listening as well, but how many of you have a client who just can't find the house they want? They're a move-up buyer. They're not a first-time home buyer. They're someone who's sold their house. They've gone through the process before. They've lived in something 5-10 years. They know exactly what they want, and they can't find it.
Right.
So you may be able to find them houses that are close, and then they walk away and don't want to do anything just because it just doesn't have the right kitchen. It doesn't have the right floors. It's not upgraded the way they want. They're already putting a lot of money down. We talked about today, money's not cheap. Right. So the cost of doing a loan, everything else is through the roof. Rehab loan will come in. You can buy a house. You get it under contract. You're submitting an offer as is. Okay. Whether it's FHA or whether it's conventional, you're doing an as is offer. So I'm going to pay you $300,000 for the house. That's what it's worth right now. I want to take and put $100,000 into that house to renovate it. I don't have the cash. I want to finance it. You can do what's called a rehab loan. We'll do a $300,000 purchase. We'll put $100,000 in an escrow account. The money is paid out as services are done. Now, everything's underwritten that way. You're going to have a contract for $300,000. We're going to get an estimate from a contractor. You want to make sure you have a legitimate contractor. He understands what you're doing.
Does it have to be a specifically like approved contractor with the company, or can it be?
No.
Okay.
So you're doing an FHA loan. You're doing a conventional loan. You want to make sure your contractor knows what he's getting into.
Right.
You want to make sure it's reliable, because they can't come back and change order you to death.
Yeah.
Once the loan closes, the money is set aside. There generally is a buffer, whether it's 10%, 15%, depending on inspections. That money is set aside, and he doesn't come back and ask for more.
Right.
So let's say, he gets into it and he goes, well, I really underestimated the painting. Instead of $3,000, it's going to cost me $10,000. There's no money for that. So it's coming out of the pocket. So the program actually has fail safes to protect the consumer and everything else for that. They do the inspections. You're going to inspect the house and even appraisal. Inspector will work with what's called a consultant. A consultant comes in and it's a go-between between your buyer and the bank, and they basically review the bid. Your contractor will submit a total bid, and let's say it's $100,000. He goes down item by item, whether it's tearing down walls, doing floors, painting, doing a roof, whatever it may be. And he'll go back to the contractor if there's something off and say, hey, I don't know how you're going to paint this house for $3,000. There's nobody out there that's going to do it.
Yeah.
They'll get it adjusted to where it's acceptable. And it's explained to the contractor again at that point. So the buyer pays for the consultant, but it really is a good thing to have.
Is it mandatory when you're in that process to get more than one estimate?
It's not mandatory. But
definitely recommended.
Definitely recommended. I mean, that's where you guys come into play, working with your buyer to consult them of, you might want to, unless you know somebody and you know what you're doing, get multiple bids and make sure that contractor knows, hey, this is just like a construction loan. Mm-hmm. You are getting paid. You're not getting all your money up front. We can do a draw up front, but you're getting paid as work is done.
Right.
And a lot of times you're talking $40,000, $50,000, $60,000. Contractors will go in and knock that out in one draw. So they may be getting a little bit up front, but until it's complete and, either a UNO is issued or permits are cleared, you're not getting that final draw.
Right.
So they need to be aware of that and know what's going on.
And I assume that in this scenario that the appraiser is also going to make sure that whatever these things are that they're going to do is going to actually increase the value of the property.
So we do an appraisal ahead of time.
Okay.
We get all the bids. Generally, the appraisal is done and then updated later on once you have bids. So let's say your contractor's bids come in and it's $100,000. 300 plus 100 is $400,000, what we call total acquisition. Some of it may be able to roll in based on the appraised value, but we want to make sure it's going to appraise for at least the $400,000.
Right.
If it doesn't, borrower's going to have to put more money down.
So they're appraising it based on what it will be after the work is done.
Correct. So there's two values on an appraisal for a rehab loan. There's as is. So if you have a house that's just dilapidated, it's not financeable by anybody because of the condition.
Right.
You're going to get a value that's probably $100,000 less than what it should be.
Right.
The appraiser actually is going to look at that bid sheet and go, okay, they're putting this, and this. They're adding a bedroom. Wow, that's great. They're updating the floors, and then that's going to be what he does the comps on for his completed valuation. Right. And you're going to have two values on that appraisal. And that's what we go by for processing underwriting of the loan.
So for those rehab loans, do you require more money down?
So FHA is standard 3.5%. It's primary residence only. Conventional rehab loan, we can do first-time home buyers, 3% down.
That's great.
You can do a second home, minimum 10% down. So just regular guidelines. Or we can do an investment home, generally 20% down.
That's what I was going to ask. So you do that for an investor. Let's say you find a triplex or whatever, right?
Yeah,
and it's in rough shape and you need to just do some quick cosmetic stuff before you get some renters in there. You guys do that.
Yeah.
That's awesome.
You know, there's a lot of fees associated with it.
Right.
So you've got permit fees, you've got title update fees, you've got the consultant.
And those are
you want to make
upfront
sure
fees.
it's worthwhile. Some of them can be financed.
Yeah.
It all depends on the value.
Okay.
But you want to make sure the juice is worth the squeeze.
Right.
Right. So if you only need to do $10,000 worth of repairs, it's not worth doing the loan.
Yeah.
Rate's a little bit higher, and then the fees associated with doing it are out of pocket, and it's, depends on the price.
Right. So this is perfect for some of you out there. I know a lot of married couples go out there, right? And the husband's like, "Yeah, I love this house. This is like a perfect house." And the wife's like, "Look at this kitchen. We can't do it. It's terrible. We can't do it with this kitchen." So that's a perfect opportunity. Especially, obviously you want the house to kind of be sitting there for a little bit just to make it a little bit more appealing to the seller. Obviously, they'll be in a situation where if they've been sitting for a while, they're more likely to consider something like that.
It's generally for repairs. You're not going in, tearing down a house and adding a ton of stuff, right? You're going in and fixing what is there.
Yeah.
There are instances, and it depends on the county and regulations of what you can and can't do. I had one where they completely tore it down, had to leave the foundation, and they rebuilt an entire house because it was falling down.
Yeah.
But it was the perfect location, and it's what they wanted. So they did the whole process with the county.
Is there a maximum on the amount?
Yeah, I was gonna say
that you can, that they'll lend as far as for those things.
So it's normal lending guidelines as far as county loan limits, everything else, and that's what you go by.
Got it. Okay. Now
that
what happens?
Part sounds a little bit similar to like the construction, a perm or whatever it's called.
Yep.
Where there's two different, or the appraisal is like if on a to be built, the appraisal is with all the options and packages and things that they've added, right?
Yeah, and they'll give you, so when you do a construction loan, you buy a house, you go in, they're going to give you value based on the land. So you'll have two values, one's for the lot, and then they'll have a value based on finished product. So if you do a construction to perm, you're getting an appraisal before they even put a shovel in the ground based on plans and specs. Here's the plans that you've come up with. This is what the builder's going to build. The only problem with that is I had one rehab loan, and construction sometimes is the same. Had contractor issues. She priced in doing a basement. Contractor walked out on the job. She never completed her basement.
Oh,
Wow.
Appraisal came in like $10,000 under value. But she wasn't. We were holding the money. She just decided, okay, I'm not going to finish the basement. We worked out the details, but things change, as you go.
Right.
Same with a construction to perm. You're going to build a house. It may change. There are change orders. We had a builder in today and talked about putting in a cost overrun or a buffer, 10%, 15%. Some lenders require it. Some say it's a good idea to do. That way you're not coming out of pocket for all the change orders.
Let's kind of clarify real quick what a construction to perm loan is for the consumers that are out there kind of watching and that don't know. And there's a lot of people out there now, because they're not finding what they want on the resale market, that they're looking into land. And a lot of them don't understand what all is entailed. We talked about this a little bit earlier. A lot of people think that, first off, one thing that a lot of people don't know is that you're not financing the land.
Right.
Yeah, you're not going to get a loan on the land.
You're not getting a loan on the land. The reasoning behind that, obviously, is let's say something catastrophic happens, you lose your job, your scenarios change, right? What is the bank going to have as leverage to get their money back from the loan for this land? Nothing, right? Because land sits the majority of the time. So tell us about, let's say a client or one of your buyers calls you up, Darren, and they're saying, hey, I just found this wonderful piece of land over here. It's exactly where I want to be. Who do I talk to? You first or the builder first? Right. What am I doing?
It's kind of a combination. Let's say you're not going to a builder. You just look around and you go, wow, I found this lot. I want to know what it means to build my dream house on here. You want to do what's called a feasibility study period. So let's say they're your clients. Right. Take them in. You put the lot under contract and build in anywhere between 15 and 45 days, depending on the county and how in-depth you need to get, to figure out if you can build the house you want on that lot.
Right.
Based on water, sewer, Does it perk?
So
What
in
kind
the
of septic
resale
are you gonna
market,
need?
we have
Everything.
home inspections, right?
Right.
And then in the land world, we have a feasibility study. We're making sure there's not 100 feet of shale below the surface of the ground, and that there's, that there is a capability to have a well there, and that type of thing.
It'll also give you a basic idea. If you're talking to an engineer or land developer, they're going to have a basic idea now of what it's going to cost you to develop that land, the clearing, the septic, the water, everything. And then he'll actually be able to tell you with the county, what is it going to be permitted for?
Right.
How big of a house? Even to the point where, okay, well, if you build a 4,000 square foot house, it's going to have to be oriented over here because the septic field will have to be over here. You may not want that view. You may not want that orientation. So it's not very smart to go out and buy a lot without at least having that feasibility study period. You may be stuck with something that you have to turn around and sell.
Or, and then finding yourself that you can't sell it because no one wants to buy it because you can't build a house on it.
And that's why when you walk into a reputable builder, the one we had in today,
Yeah.
I think you're building with them as
Nickel,
well.
yeah.
So they've already got land that's been developed and it's laid out. Your house is going to go here. Here's where your septic is. Here's where your driveway is going to go. So you know exactly what you're doing when you walk out on that piece of land.
Right. And some construction companies like Ross Nickel, they'll do a feasibility study for you.
Yep.
If you have a lot or you find a lot and you want to build on it, you go to them and they'll do a feasibility study for free.
Yeah. That's similar to the other builder we had out a couple weeks ago, where essentially we just throw them the lot number or the address or whatever. They pop out there. They'll actually do it prior to you even making an offer. Gross Nickel won't, because I think they're a little bit more high end and their time is super valuable.
Right.
Go out if you're interested in something like that. I would say the first thing to do would be definitely talk to a lender, right? Because first off, if it's the cost, it doesn't match kind of where you need to be, then it's just not even worth exploring.
Right.
That's correct.
Once you get past all that, let's say you want to build, you're going to talk to a lender. They're going to put numbers together for you and show you what a construction loan means. What
Do
the
they
rate
have to
is,
have
everything
plans
else.
prior to talking to you?
No, because we qualify you based on a sales price.
Got it.
We estimate the taxes for the county based on the price to build. Usually your assessed value is going to be less than the appraised value. So we're overestimating, which is good.
Yeah.
We know what the costs are going to be with the county. As long as everything's rolled in to the cost of the build, in other words, the engineering, everything, we can give you a better estimate. Let's say you move forward with that. We go to closing. You're going to close on a construction loan, just like the rehab loan. Let's say $500,000 is set aside to build. That's your build cost. Let's say 150 goes to land. Land is paid for. So whoever owns the land is paid in full, and the land goes in your name.
Got it.
The money is then sitting there as you go through draws. Every builder's different. It could be 7 draws, could be 9 draws, could be 11. Once that last draw is issued, the U&O is generally right behind that, which is your use and occupancy. The builder's paid off, and then that loan is either modified into a 30-year fixed loan, or you refi it, do a second loan. So it's either a
So are you making
construction, a
payments?
perm, or
You're
a
making
construction.
any other payments other than the draw, or
It's like a credit card.
okay,
So your first draw would be the 150 for the land,
yeah,
and then you're paying interest only
got it.
on that as you go month to month. You have what's called a builder risk policy, which covers against people falling and hurting yourself on the job. The other thing is, once you have stuff installed, you own the land. Foundation's in, you own the foundation. As it gets framed, as plumbing goes in, mechanical, everything goes in, you now own that. If it's sitting off to the side, it's not yours yet. It's not installed. It's the builder's responsibility typically. But you want to have that builder's risk policy to protect you against anybody hurting yourself on your property.
Right, for sure.
You don't have taxes or insurance escrowed, so that's why you have that builder's risk cheap, $300 a year, or something like that. Once you finalize and the construction loan is paid off, you have to convert it and escrow taxes, insurance most of the time. So there's generally an extra payment at the end to set up, or like I said, you're refinancing, depending on what type of loan you do.
Gotcha.
So.
Are you seeing, how much of that are you seeing, would you say, in your business over the last couple of years?
Quite a bit.
Yeah.
The cost has gone up for construction. I mean,
Sure.
it really has. So whereas you could probably build a house for $180, $200 a square, now we're seeing $250, $275 and up,
Yeah.
depending on what you're putting in it.
Yeah.
Cost of land's gone up.
Cost of construction materials have gone up
And still going up.
and still going
That's
up.
the thing that's what Grossnickel was saying today in our meeting was that over the last however many years, I think he said he's been doing this since 2008, I think. And he said the price of materials has pretty much steadily gone up the entire time, other than maybe like once. But
Right.
Why would it ever go down?
right, exactly. God's not making any more land out here.
No.
And just like us, the realtors, that construction owner said, when's a good time to buy a house? When's a good time to build a house? Now.
Right.
Now.
Absolutely.
Well, I think new construction, custom build, all that kind of stuff is good. We were talking about inventory issues, right? Like you can't really find what you're looking for. So I think, going with new construction, it gives you more opportunity.
It's at least worth checking out.
Yes.
Yep.
It's at least worth checking out. And it may not be a good fit for you, but you can't make an informed decision until you have all the facts right there in front of you.
Yeah,
I have lots of clients that come to me and say, "Hey, I think we're going to build. Just can you do a construction loan?" I'm like, yeah. Can you work up numbers? Tell me. I'm like, no, I'm not doing anything for you until you go talk to a builder.
Right.
I want you to figure out, because you're looking at an $800,000 house on resale market.
Right.
It's probably going to cost you $1 million,
Yeah, exactly.
over $1 million to build that same house from scratch.
I think we were saying pretty much it was between 10 and 15% difference between like a resale. And that's like, so for example, the only reason I actually started learning about that was because I have a client of mine who's building a house that's over $1 million. And he asked me to look and see what the comps I think would be like when he goes to get it appraised. And that's what Rob was telling me. He's like, look at all these resale comps that you have here in the area that are comparable to that. Find out what that number is, and then add about another 10 to 15% on there, because that's just what it's going to be for the to cover the cost of materials and everything else.
Right. And then it depends on where you're building.
Right.
Are you in critical areas? Anything like that. If you're near the water, it's exponential.
And you have a lot of that, I think, down where you are.
And the timeline, to get a permit in areas like that is over a year.
That's incredible. So, okay, construction and perm loan, you get all the quote, all this, and you pull permits. So it could be like a couple years.
We generally get people qualified, and then they sit and wait.
Yeah.
We don't fund the loan until they're either have the permit in hand or getting ready to.
Right.
The builder's going to know, okay, we're next up. We're going to have permits in 2 to 3 weeks. There's no reason for them to fund the loan and start paying interest on the land when they don't build for a year.
Exactly.
Do most builders, if they know they're not going to be able to start building for like another year, whenever they're coming up with their cost assessment, are they factoring in the price of materials going up between that year?
So that's the hard part. Right? When you talk to a lot of builders, if let's say you quote somebody today and you don't get a permit and don't start ordering materials until next May or April, whatever it is.
Yeah.
Right? Your cost could have gone up 10%. So you're adjusting and changing. So a lot of times with lending, we'll buffer the price by 10, 15%.
Okay.
Or increase the rate higher just to make sure we're qualifying. But then the builder's going to come back when they're getting closer and update pricing.
Right.
So your build contract changes.
Gotcha.
On those long ones.
Yeah, another thing that people don't factor in, and we learned today from Grossnickel, right? He can build this house in Hagerstown, and he can build this house in Frederick, and it will cost the same to build.
Yeah.
But when you go to resell that house, the house in Frederick will probably fetch more money than the one in Hagerstown. So you got to factor in that also.
Location.
There's there's all kinds of things when it comes to building.
Okay.
Hey, Gabby, who's building your house?
Grossnickel.
They're a good builder, aren't they?
They are an amazing builder. Yes. I actually looked into Keystone before them.
Right.
I was thinking about going with Keystone a couple times actually, but just like John said at the meeting, they have a lot that's automatically included, right? And Keystone, every single thing was an upgrade. Upgrade here, upgrade there, upgrade there. By the time you upgraded everything, it was way more expensive to build with Keystone, even though their original price looked more affordable. At the end of everything, it was way more expensive. So
Right.
I was like,
So Grossnickel uses high quality products, right?
Yes.
Their customer service is excellent.
Yes.
He was impressive. I mean, today in your office,
Yeah,
presentation,
we learned a
good.
lot from him today.
Yeah.
Yeah. He's definitely known in this area, specifically Frederick County, as the best builder, I mean, really around here. So it was nice to get some FaceTime with him and definitely see what he's got cooking. And it sounds like he's, really got his hands in a little bit of everything too, because I'm excited to see what he was talking about with that condo that he's, he didn't say where it was in downtown Frederick, but
I think that will not be too hard to figure out.
No, I don't think so either. Once it's up there, we're going to know about it. I really appreciate everybody tuning in today, and hopefully you learned a little something about the process between a rehabilitation loan and also a construction of perm. And please, if you have questions about that, reach out to our friend here, Darren Rickwood at First Home Mortgage. He does a fantastic job, and I'm telling you, he will get everything pushed through in a timely manner. I've seen firsthand his level of expertise when it comes to staying in contact and keeping the ball rolling. He does not let up off the gas. So we really appreciate it.
He doesn't, and he always calls me and updates me.
Yeah.
There you go.
Yeah.
I just like talking to you.
I know. My wife's getting jealous.
Thanks for joining, everybody. We'll see you here next week, and have a fantastic week, and we look forward to hearing from you.
Bye.
See you next week. Bye-bye.